If you want to improve your trading skills, then being able to analyze and recognize certain patterns and trends on a chart is very vital for your trading journey. Last time we spoke about higher highs and higher lows, but today we're going to be talking about the consolidation chart pattern. Now on my screen, I've drawn a consolidation pattern with a black arrow. As you guys can see with the consolidation pattern, a stock price has not picked a certain direction. It's just trading sideways between a certain range. So if we connect the highs and the lows using a trend line, so let's connect the highs and let's connect the lows using a trend line. You're gonna notice that whenever you see this pattern, a stock is just trading within this range. Now, if you're a stock trader, this is not a range that you want to trade in because a stock has not picked a certain direction. This is the same thing if you're an options trader. You don't want to be trading this type of price action because the stock has not picked a direction. And with options contracts, you really want to benefit from big moves that a stock decides to take. So whenever you're seeing a consolidation pattern, you generally don't want to trade this unless you're scalping this. You could scalp it from this low to this high or from this high to this low. But in general, you don't want to stay in these type of trades for too long because the stock has not picked a certain direction. Okay, guys, so the next thing that we're going to do is that we're going to observe an example of this consolidation pattern on the SPY chart, specifically on the 4-hour time frame. Now, when you observe the 4-hour time frame, you guys can see that we have been consolidating in this range ever since December, right? The stock has not picked a direction for us to trade. Generally speaking, you do not want to trade this if you're a stock or an options trader unless you are scalping for a certain amount of gains. So guys, whenever you recognize a consolidation pattern, sometimes it is better for you to just sit on your hands and not trade until that stock decides a specific direction. So within this range, we either expect to see the stock blow past this range, or we can expect the stock to break down from this range. And only from there can we make a more informed decision whether we want to long or short the stock.